Good morning, everyone, or good afternoon, I guess, to our colleagues on the East Coast. My name is Mary O'Brien, and I'm the National Practice Director at Patina Solutions for the healthcare practice. My background before I started here at Patina 6 years ago was working in individual hospitals and leading individual hospitals in large health systems around the Chicagoland and the Milwaukee area. Today, we're going to be discussing private equity in healthcare. And Scott Hoffman is our expert who will be discussing private equity in healthcare with us today. We thought this was an excellent topic for discussion with our nation because we have gotten a lot of questions from our experts in the nation about private equity, what's different in private equity between healthcare, not-for-profit, private equity, and also how do our experts present themselves for project deliverables or interim positions in private equity in the healthcare industry. And so I'm going to turn this over to Scott. Scott's going to present his background a little bit, and then we'll get on with some of our questions. Scott?
Thanks, Mary. Appreciate everybody joining. A little bit about my background. I've been with Patina for a little over a year as National Practice Director for Private Equity Solutions. So that the scope of that role really includes a number of things. At the core, it's scaling Patina's model for the private equity market, which would include things like refreshing the model, making sure the go-to-market strategy is right for the market, tweaking maybe messaging, looking at our value proposition and deciding on the things that are most relevant for our private equity clients. Also would get involved once we've got opportunities to pursue, preparing candidates for those opportunities, what private equity is going to be most focused on in an interview setting, and then doing that interviewing and screening myself as well. Prior to Patina, I was in private equity for a number of years with a firm in the Chicago area by the name of Baird Capital. I was an operating partner on a full-time basis for Baird Capital and really responsible for three things. On the kind of pre-deal side, I work with the investment team on the strategy, where we'd like to be investing dollars, then help that team create deal flow, due diligence that deal flow. On the back end, so post-deal, I spent probably more of my time, so 60% of my time. Once the deal got over the finish line, I would work with the senior executive team, always with the CEO, usually with the other members of the executive team, really driving that business forward for whatever the investment thesis was for that business. So what I should come to Patina with, and hopefully this call with, is a reasonable amount of experience in the private equity space. Hopefully can be helpful with any questions you may have if you're interested in entering a private equity backed situation. And I look forward to the discussion.
Thanks, Scott. So I'm going to be asking you some of the questions from some of the slides here that we have, but also for our audience, if you have questions that you have for Scott, please go ahead and enter those online, and we will answer them during the Q&A session after Scott answers some of the questions that I know our colleagues have already and that we have prepared for this discussion. So Scott, maybe just begin with what is private equity in healthcare, and what are some of the comparisons? We hear the word venture capital, et cetera. What are some of the differences in private equity and VC, or just private equity in general?
Yeah, good question. A couple of perspectives on that. Let's take it from the investor's perspective. Private equity is essentially just another investment option. So if you're looking to put dollars to work from an investment side, you certainly have choices around stocks, bonds, real estate, et cetera. Private equity would be another option for you to look at as an investment alternative. If you look at it from the private equity firm's perspective, what they're basically doing is receiving capital from a pool of investors, and they bundle that capital together into what is commonly referred to as a fund of some size, and then they basically invest out of that fund on behalf of the investor pool. Their goal is simply increasing value over time. Typically, a hold period could range from 4 to 6 years. And they're buying businesses and then looking to sell them at a much higher profit again, 4 to 6 years down the road. Those time horizons can vary based on a private equity firm's, philosophy, but generally they're trying to make those dollars return as quickly as possible for the investors. And I would say on average, they're getting out of investments in 4 to 6 years or so. Private equities are almost in every case taking a majority stake in the businesses that they're acquiring. And if you compare them to venture capital businesses, a venture capital is really a subset of private equity, but those investments in venture capital are in much smaller, usually much less profitable businesses, typically viewed as startups. Usually the startups are viewing growth capital as an opportunity to launch them in a really positive direction for whatever their thesis is. So, and long and short of it, venture is a subset of private equity. There is another fundamental difference in venture. I think every venture deal that I've come across is in a minority deal. So they're not taking a majority or a control position in that particular business that they're investing in.
Thanks, Scott. Can you tell us a little bit about what are the backgrounds of some of the investors in PE and some of the leaders in PE as well?
Yeah, the backgrounds from an investor side are, I would say, twofold. One area is just kind of large investors that are more institutional, like banks, insurance companies, private wealth management firms. The other investor pool is individuals, usually relatively high wealth individuals that are typically called, or not typically, they are called LPs or limited partners. Those limited partners would understand that investment option is essentially illiquid until the businesses begin to get sold out of a particular private equity fund. They're generally a little bit more tolerant to more risk, but they're trading off that higher risk and lack of liquidity for what they view as higher return opportunities from a scenario perspective. A typical private equity firm background, leaders in those firms can range in a number of different directions, but they're almost always super highly educated individuals. So the notation of smartest person in the room typically applies to a private equity managing partner, investment partner. They got really strong financial backgrounds, investment backgrounds, which allows them to take other people's money and put it to work, hopefully in a really smart way.
So you said, Scott, that obviously the motivation is value and the motivation is the investment and to grow that investment over time. But what are some of the other motivations of PE investors?
Yeah, at the core, it's, they're taking other people's money and trying to get a return as fast as possible, and beat the market. So they're basically competing against other investment alternatives, again, such as stocks, real estate, bonds, etc. So their motivation, again, is to outperform those alternatives. To accomplish that, the PE owner is really tasked with growing the business that they acquired and scaling it to be more profitable than it could have become without them as a partner. So this usually requires a number of levers that could be pulled, from upgrading talent in that firm to improving systems, processes within that company. Almost in every case, investing in other opportunities for growth. That could be investment from an organic perspective, also very much focused on an inorganic perspective. So a private equity firm would look for add-on acquisitions that could be tagged on to that original platform investment to scale it to another level. And then a PE firm would be looking at other foundational elements that help support, from a rigor, operationally, a discipline perspective, anything that would really allow that business to scale.
And so what industries are private equity firms most interested in right now, or which ones are you the most experienced with, et cetera?
Yeah. In 2018, just some stats for you. There was $878 billion invested by PE firms into the U.S. market. $878 billion. over 4,000 transactions or deals made up that 878 billion. And it breaks down as follows. Manufacturing is kind of the largest segment. So 32% of that 878 billion was in the B2B space. So manufacturers basically selling to other businesses. 20% was B2C. I would say, again, mostly manufacturers selling to consumers. And then it falls to information technology, about 18% of that 878 billion. And then healthcare, which is why we're here. So 12% of the 878 billion was from healthcare. Healthcare was the fastest growing sector within PE firms, although PE firms in 2018 grew by 12%. Healthcare grew by 20%. And if you just do the math, it's almost $90 billion were invested in healthcare in 2018, and just shy of about 500 transactions.
So why are private equity firms attracted to healthcare?
Yeah, there's some fundamentals that any PE firm would look for any investment opportunity. Healthcare provides a number of those characteristics, starting with it's viewed, and I think truly is, far less volatile than other investment opportunities. So it's viewed as stable. And by that, it's not really a project-based business per se. It's not dependent upon capital equipment or other things that could affect cyclicality or volatility of a market. So there's sort of a consistency of healthcare that from an investor perspective, which a private equity firm ultimately is viewed as attractive. Also, they're almost like a consumable. Healthcare is viewed as kind of a recurring revenue stream. Everybody basically needs healthcare. So you're able to generate free cash flow in a more predictable way, which is very attractive to a private equity firm. It's still viewed as a very fragmented market. So if you look at it from a private equity firm's perspective, there are some very large firms, but it's also made up of a lot of relatively small, mid-sized firms that you kind of get your head around competing against, or looking at those as potential additional add-on acquisition opportunities for a platform deal that you may do in an acquisition space or a private equity space. At the core, the market is good. So a private equity firm would look at healthcare and see a super large market that's growing, profitable, trends behind it, drivers behind it that give you some comfort as an investor. This thing has real runway. The financial characteristics typically are reasonable, if not good. And at the risk of putting people on their heels on the phone, as a private equity firm would look at a healthcare opportunity as, in many cases, not terribly well run historically, and maybe not optimizing what it can be doing from a cash generation or a money-making perspective. So a PE firm would look at healthcare as an opportunity to improve that if they could, put some resources in place to take it to another level.
So Scott, you already said that a growing investment is one of the major metrics of success in any private equity portfolio company. But what are some of the other metrics that determine success?
It's blocking and tackling metrics. So it's sales growth, it's profit growth, it's free cash flow. And the reason it's free cash flow is most of these private equity situations are leveraged through lending arrangements. So you buy a $100 million business for $100 million. Private equity firm would typically invest $30 million, and they're leveraging the balance, or the $70 million. And so you in an ideal world, you want a business that's consistently spinning off cash in a pretty regular way and allows you to pay down that debt. And so free cash flow becomes an important metric that you would look at within that scenario. And I would say the last one, Mary, would be pipeline. So maybe less relevant in healthcare, but in general, a private equity firm would be looking for and leading indicators of future growth. So is there runway of, let's just say a dermatology practice or a dental practice, how many new customers are coming into that practice? And, is there a system in place to capture how long they're staying with the practice and how many are coming in on a monthly basis? And if a PE firm can see that that's ramping, then you get some comfort that there's a real runway for future growth opportunities, and that becomes attractive for the next buyer pool.
So what type of backgrounds are needed to succeed in a leadership position in private equity? Specifically, we're talking to our nation here. So what sorts of experiences, backgrounds might a private equity firm look for in bringing on new leaders?
Yeah, it won't be a surprise to anybody on the phone, but to me, it starts with a track record of success and results. Private equity firms are, uber focused on impact and results and returns. And if you can demonstrate a background that you've delivered and you've delivered consistently, exceeded goals, profit goals, sales goals, whatever the goals are, you're looking, private equity firm is looking for a consistent track record of performance. Also some softer things that they look for. They look for an ability to work with speed and urgency. Certainly looking for whatever the relevant business model or functional expertise is for that particular situation. Most cases, they're very attentive to, is the individual willing to be hands-on? When I entered private equity, I got a number of questions around, hey, I came from a large public company before I joined private equity. And there was a perception, and sometimes a reality, that public companies move slow, they're bureaucratic, you don't get your hands dirty, you're just sort of orchestrating a bunch of other people. And a private equity firm can't really work that way. They're pretty lean, they're pretty mean. So they're looking for folks that are willing to get their hands dirty and be very hands-on with whatever they're trying to accomplish.
So maybe you have someone answered this question already, but how do experts with healthcare backgrounds, like myself, for example, get leadership positions in PE portfolio companies? What kinds of experiences and leadership are attractive to private equity? You talked about that a little bit already, but what else is there that you could tell the people in the nation to get ready for, I guess?
Yeah, I would do a couple things. If you're interested, I would start with just using the internet as a phenomenal tool. And you can do some really good searches in today's world around private equity firms of various sizes. They'll be pretty explicit in what fund size they are and how much they're investing. So you get a sense of how large of PE firms they're looking to acquire. And you can filter by size, you can filter by industry, so you can quickly get size and healthcare as the two predominant filtering criteria. And then I would just use that information as a networking tool. So those same websites are 9 times out of 10 going to list all the key individuals within the firm. They're going to be, in many cases, listing how to contact them. And any good private equity firm worth their salt is looking for talent on a regular basis. And they're going to be willing to have a conversation with people who have a good track record, have an interest in healthcare. As I mentioned earlier, healthcare is a hot space. If they're doing deals in healthcare, they're going to want to be very conversant with healthcare professionals and people that are looking to get into private equity-backed situations. So, kind of strategically looking at it with the web as the primary tool and networking being kind of a secondary tool that you use within that. And then obviously Patina is a wonderful opportunity. Mary's built a great practice in healthcare. We're building hopefully a very good practice in private equity as well. Between the two practices, we've got a good knowledge-based expertise and assistance that can provide you with opportunities that may become really interesting for you within the private equity and healthcare space.
So before we get to the Q&A, of which we have a number of questions now from the audience, let's ask one last question, Scott. pretty basic information about what are the differences working for a private equity firm than perhaps a public company, a not-for-profit health system, a for-profit or not-for-profit hospital. What are some of the differences?
Yeah, I think there are more nuances than just huge differences. And some of the nuances that I've experienced would be, private equity, again, is working on a pretty short timeline. They're buying a business, looking to create value in that business and exit it in 4 to 6 years. So, in the first 2 or 3 years, they're looking to really make an impact. And a lot of the investment a PE firm will make, a lot of the structural changes that they'll make will be in the first couple of years. So there's a real sense of urgency to do that. And that's a little bit of a nuance than what you might see in nonprofit or a public company setting, because the clock is so evident and clear. I would say generally there may be a little bit more autonomy in a private equity backed situation. A good PE firm realizes they're not professionals at running businesses or running healthcare practices. They're looking to bring in the right people and let them do their job. And there'll be check-in points once a month. But as long as everything's rolling along reasonably well, you're given a ton of autonomy. There's minimal bureaucracy, which can be really refreshing. And you need to be attentive to, keep bringing up free cash. But, again, if you've got a leverage situation, that could be very different than a nonprofit or a public company situation. So your ability to manage cash, maintain profit levels, avoid any covenant breaches with a lender would be something else to be particularly focused on.
Yeah, that would be very different. So we're going to get to some of the questions from the audience, Scott. This first one is there an average of how long a private equity firm owns and manages a portfolio company? And what happens to the leaders when a portfolio company is moved on or sold, or that a particular PE firm ends their relationship with a portfolio company?
Yeah, good question. Average would be probably 5 years from the time a PE firm buys a firm to is looking to exit it. And if they hit it out of the ballpark, they being the PE firm in a couple of years and triple the size of the business, and it's a great market to exit a business, they'll certainly look to exit as quickly as possible because they're able to return cash back to their investors in that case. But average was the question, and average would be about 5 years. So what happens to executives upon sale of a private equity owned firm? The quick answer is it depends. If it's sold to another financial buyer, and by financial buyer, I mean another private equity firm, in many cases, those same senior executives are going to be given an opportunity to stay on with the next owner, assuming, of course, they have the skills and capabilities to help scale that business to the next level. If it's bought or acquired by a strategic buyer, that senior executive team and the picture of what happens to them, candidly, is less clear. So if you're a CEO, a CFO, head of HR, head of IT, and you're bought by a strategic, those same roles are going to be in place by the strategic that acquired you. So usually there's room for one, but not two of each one of those functional leadership roles. So that's it won't necessarily mean you're on the losing end of that, but it's going to be you or the other person. The rest of the management team, middle level managers or other folks or leaders within the business are typically viewed as very critical assets to the business. That's why a PE firm is buying them, for the people and all the other things that I suggested earlier. And so they're looking to retain that talent. So more certain for middle and below, maybe less certain for executives, particularly in a situation that's bought by a strategic buyer.
So two questions that I'm going to combine here, Scott, from our audience. what types of websites are out there for people to learn more about private equity or to learn about specific private equity firms? Can you please identify specific sites to search and to filter private equity firms?
Yeah, so most of them are coming at a cost. I mean, not the websites per se, but I think the genesis of the question is what tools are available that really could help you educate yourself on private equities and opportunities. We go to a tool by the name of PitchBook. There's a cost for that on a monthly, quarterly, annual basis. I'm guessing a typical individual will not want to make that investment, but effectively would give you every single contact that you would ever hope to have in the U.S. market for private equity. So who all the firms are, who all the partners are, who all the mid-level managers are in a private equity firm, gives you filtering capability to navigate in PitchBook. But again, there's a cost for that tool. What I would do first is just Google private equity, healthcare. And you'll be amazed at the information you'll find from that Google search, and you just navigate from there is the way I would search it. There's not a silver bullet free website that I can recommend other than kind of the good old fashioned way of Googling things that are of particular interest to you. Yeah, again, maybe it's dental practices, healthcare, private equity, and you'll get really interesting information coming from just that search criteria.
So this probably comes off of that question. How do private equity firms advertise and fill positions? Find talent. Where can our Patina Nation members look, both within Patina? Who can they connect with within Patina to emphasize their experience with private equity firms or their desire to work within private equity firms? Where are those sorts of things? Where is that information? Where do private equity firms advertise even outside of Patina?
Yeah, I would say advertise is not the word I would use. So where do they search for talent? It's kind of the traditional ways that most businesses do. Not many, maybe half of them would have their own human capital resource or leader that would play point for searches for portfolio companies within a private equity firm. So they would turn to that individual first. Sometimes there's maybe a couple individuals within a human capital area within a PE firm. They would always use their network. PE firms are really well networked. They're looking consistently for deal flow. And as a result, they've got broad, fulsome networks that they can turn to for talent. And then they would use firms like Patina as a search firm. Patina's really built up a really nice private equity practice. They've got a very nice healthcare practice. My recommendation, if you're interested in getting into private equity backed situations, you make sure your profile is up to date. You make sure there's keywords that speak to your interest in private equity. If you've got experience in prior private equity backed situations, that would be the best case scenario, that you list that you've kind of been there, done that, have successfully been a part of a private equity backed situation. So those would be the three areas that I would turn to, and again, be attentive to updating your Patina profile. That would just certainly help you improve the odds.
So this question comes off of what you just said, but maybe there's more to it. What expertise should be emphasized in a resume or an interview?
Yeah, it's many of the same things I touched on earlier. So I would definitely touch on, if you worked in a private equity backed situation in the past, that's the first one to lead with. Right or wrong, there's an inherent bias in PE firms to hire CEOs and CFOs in particular that have previously worked in a private equity backed situation. So if you're one of those, you'd want to highlight that and make sure you speak to accomplishments in those roles, because a private equity firm is going to look for, have they worked in PE? and what's the impact of when they've done that. If you're not in a situation, and I wouldn't view it as overly daunting if you haven't worked in PE before, I would just stress the things that are going to be most relevant to them, or things that they would be maybe perception-wise most concerned about. And so again, in my case, I came from a big, large, publicly traded company. They thought I was not going to be able to work fast enough, or they thought I wouldn't be able to be hands-on enough. You'd want to speak to your ability to work with urgency, to work collaboratively, to work very hands-on, and not just, an orchestra leader, somebody that's actually willing to get your hands dirty and work with the team to drive whatever result you're trying to drive.
So I've gotten a number of these same questions. What are the elements of compensation for senior leaders within private equity portfolio companies? How is that different than what might be found elsewhere? And how does that work? Specifically, equity, other types of compensation?
Yeah, I would say it's at market when you think of salary and bonus. So I wouldn't view a private equity backed situation that you're pursuing fundamentally different than what you would find. Maybe I can't speak to the nonprofit, but for sure other situations from a salary and bonus perspective, I think it'd be pretty comparable. Where it starts to differ is the last piece, Mary, that you alluded to. So if you're a senior executive, there should be an opportunity to have an ownership position or an equity position in the PE firm. And if you're entering, let's say, 2 years into a 5-year hold period, sometimes that gets a little clumsy to rewrite a bunch of documents and give you equity, but in many cases they'll still do that as a PE firm. But if they can't rewrite all the documents, they'll give you an exit bonus opportunity. So when the businesses sells 3 years down the road, you should be able to negotiate an exit bonus if you're a senior executive and your role in how you help facilitate a very successful exit of that PE firm. But at the core, I would be looking at the difference as an equity opportunity. And again, if that equity opportunity for timing doesn't present itself, if you're on the senior executive level, you should have an exit bonus opportunity, which can be a really wonderful wealth creation opportunity, both equity and exit bonuses. These are meaningful opportunities, all success-based, so nothing's given to you. But if you buy a business at 100 million and sell it at 250, you will do well as a CEO in a private equity-backed situation, and you'll do well as a CFO, and you'll do well, as a COO in that situation. And you should, because you played a large role in that meaningful return for investors. The other opportunity that I will allude to is private equity really loves when senior executives have skin in the game. So you will, in most cases, be given an opportunity to also become an investor in the firm that just got acquired by a private equity firm. So you could put your own money to work. Again, it's illiquid until that business gets sold. But perception-wise, if you're a CEO in a private equity-backed healthcare situation, a lot of PE firms are going to look for you to make sure you put your money to work because they want to make sure you've got aligned motivations. Maybe less so in some of the other senior executive roles, but at the CEO, CFO role, they'll definitely be looking for indicators of alignment, and putting your own money to work is the best judge and jury on that.
Thank you, Scott. So here are 2 questions from the same person, not necessarily connected, but let's give that a try. To what extent, if any, does the private equity firm change its leaders at the portfolio company? What kinds of decisions drive that? And then is there an opportunity to be retained within patina or otherwise to evaluate the leadership team of a private equity firm or the investment prior to a private equity firm owning the company? So helping a PE firm make a decision about a purchase.
Yeah, great question. The change of leader component, the private equity are very results driven. They need to be, because you're investing money And so there's going to be a consistent focus on, do we have the right people? And they don't like any business doesn't like, changing over talent for the sake of change, because again, they're dealing with a relatively short time horizon, and people that are transitioning in and out, A, they're not usually productive right out of the gates. B, there's disruption going on in the firm, which isn't good for the holistic view of the business. With all that said, there's going to be a keen eye pointed towards performance and results, and as there should be. So if there's not performance and results of a leader, there'll likely be change. And I don't know how else to put that, but if you're holding a business for 5 years and you're a year and a half into it, and the needle's not moving towards the investment thesis, you're gonna make a change in the leader. You're gonna make a change in other people that are a part of whatever that issue is. The way those decisions are made are the way decisions are made in any other business. Depending upon the functional area that's being changed out, if it's a head of marketing or sales, the CEO of the business would have by far the largest say. If the CEO and the CFO are being thought about being changed out, the private equity firm would have a tremendous amount of influence and say in that decision. When you're evaluating, on the question of evaluating the team, I've been a part of a lot of these situations, and I want to make sure I understand the question the right way. If I don't, Mary, you can repurpose it. But if you're looking to make an investment as a private equity firm in a healthcare business, one of the primary things you're looking at in due diligence is the quality of the team. And you're trying to make an evaluation. Are these folks able to take a $50 million dental practice to $200 million over the next 5 years? Can they scale at that level? Have they been a part of add-on acquisitions and integrating businesses? Is there a confidence? In 9 times out of 10, those people have been great scaling from 30 to 50, but in many situations, those same people aren't maybe equipped to go from 50 to 200. So there's a lot of time and effort. There's a lot of evaluation going on before the deal gets over the finish line on the caliber of the team, particularly at the C-suite level, the senior executive level. And that evaluation continues throughout the whole period, but most of the heavy lifting is done before the deal gets over the finish line.
Okay, so I think the question was also, are there opportunities for people within our nation with PE experience to be asked to come into a situation to evaluate the leadership team, or to help an organization evaluate whether to purchase or whether to purchase a particular company? And that might go along with this other question, Scott, so I'll put them all together. Can you give examples of roles that Patina might have had within private equity right now, both in helping to evaluate whether a private equity firm should purchase, or what risk it just took in purchasing a portfolio company, or other types of leadership positions that Patina has helped private equity fill?
Yeah, the quick answer to the fundamental question is yes. We call them deal advisors, we being Patina Solutions in the private equity practice. So we've done a number of these in the last year, where the private equity firm is evaluating an opportunity. They're smart enough to know they're not industry experts on that healthcare sector or that healthcare practice. And they're looking to have somebody sit by their side and educate them on that business model, kind of the watch outs from a risk perspective, how to due diligence certain areas within that particular opportunity. How should they think about scaling that business? So they're looking for folks that have worked in the business model and help them think through that investment, be subject matter experts in certain functional areas or business model areas, always very interested in their strategic insight on the investment. And so that's a core part of what we do in the private equity practice. We have people within the nation every single week being looked at as deal advisors. And certainly Mary and I are working on one this morning for a deal advisor in the dermatology space. And we were on the phone with the PE firm yesterday, basically aligning the criteria that they're looking for. And it's similar to what I said. They're not knowledgeable on the space to the point that give them comfort as a PE firm, and they're looking to saddle themselves up with other people that can help supplement a space that's very interesting to them in the dermatology practice area. Other areas that would be fruitful for folks within our nation with a healthcare background, or for that matter, for any background, we place folks in board roles. So, and those deal advisors is a good example. A PE firm is putting somebody in place early days before they made an investment to educate them on that opportunity. If that thing really gets legs and that deal actually gets acquired by the PE firm, those same people are going to be wonderful candidates to be very active board members for that firm, because they've kind of proven their worth and value. And so that's a natural way for that to transition. So that's on the pre-deal side. On the post-deal side, when you've gotten a deal over the finish line, we would look within the nation for on-demand operating talent. You just think of a thesis that has 3 to 5 things that's really going to move the needle for the private equity firm with that business that they just acquired in the healthcare space. And, it could be pricing, it could be integrating, it could be marketing, it could be a number of things that are maybe in your sweet spot in the nation of expertise, that we would go to the nation for and say, we want to find somebody who has the following profile of a healthcare business that we've acquired, and they need some help in this particular area. And we go out and search for that in the nation, and then drop those folks into that particular situation. So on-demand operating talent for various healthcare and other non-healthcare opportunities. A ton of work being done in interim or permanent assignments. So if you really have an appetite to be full-time in a healthcare situation, there's a real appetite to find folks that be willing to do that in various functional areas. Very much the same answer for interim roles. Again, if you're exiting a business in healthcare, a lot of times you want to complement the CFO with somebody that can help provide additional financial support, or build a database, or help anybody on the C-suite team prepare the business for exit. Or for that matter, there's just interim roles that come up in other business models, and healthcare is no exception there. So it's a long-winded way of saying there's a number of pre-deal opportunities in deal advising board roles. There's a lot of post-deal opportunities and operating roles in various functions, and interim and permanent assignments that would be interesting for a private equity owner or a portfolio company to engage with us on.
So I'm getting this question a lot, and you've answered it, I think, Scott, but maybe let's review the answer. How do we get on Patina's radar for private equity roles if we specifically have private equity experience or want to be considered in these opportunities, other than updating our portfolio or our profile and just being in the nation? Is there something?
Yeah, I mean, the other things I would, and Mary, you can answer this too, but to me, it would be getting network with the two of us. There's one thing to be in the nation. There's one thing to update your profile in the nation, which is both very helpful. Another to kind of highlight things that would be most relevant, which we've spoken about for a healthcare situation. Those are all really good blocking and tackling things, but there's still a good networking opportunity with people that are seeing healthcare and private equity opportunities on a daily, weekly, monthly basis. And Mary and I are the point of that. And so I think we both welcome a phone call if you have interest in it, and just making sure we understand who you are, what you're most interested in, and maybe not in a phone call put a face with a name, but at least understand a little bit about your background more than just reading a profile or a resume.
So definitely, I agree with you, Scott, and to just email you or me Mary O'Brien at patinasolutions.com and Scott Hoffman at patinasolutions.com. Pretty easy to remember, and specifically point out your experience in private equity as we are getting more and more requests, both on the pre-purchase, the immediate post-purchase, and also for leadership positions within private equity.
Yep, absolutely. It's be patient though. Private equity has a huge element of serendipity where you got to be in the right place at the right time. So having made the network connection and updated your profile and highlighting the right things is all meaningful. But it's still got to wait for the right situation for what you're looking for and what the private equity owner is looking to fulfill. And those things can take time.
So maybe one last question about actually staffing and positions. And then there's a number of other sort of general questions about private equity that have come through from our audience. How realistic is it to expect that a private equity firm would consider a person's experience if they've been primarily a consultant for private equity or VC? So considering a leadership position, if you've been primarily a consultant, is that experience that is looked upon positively?
Yeah, generally say yes is the answer. Yes, as long as they've made an impact. And sometimes it's hard to tell with consultants. With Patina, we're very focused on deliverables and making sure we're managing to those deliverables. And I think what you'd want to do as a consultant is making sure you're pointing out the things you've done and hopefully the short time period that allowed you to make a real result from that engagement. And if those things line up, you'd be very attractive because you've usually seen a lot of things that would be interesting to a private equity firm. And if those things have been focused on with an end game that was an impactful result, that's really good and helpful.
Thank you, Scott. So here's a question from someone in our audience. Is the investment thesis that you referenced, goals, plans, et cetera, typically fully shared with the leaders that are brought in?
The leaders at the executive team, absolutely.
Or in the portfolio company?
Portfolio company in the executive team. And if the executive team is doing their job, then they're sharing that thesis several levels down the organization. So, if a PE firm buys a healthcare provider in the dental space and they're looking to do 3 to 4 things, those things are front and center for the leadership team of that portfolio practice, dental practice, and they should be very well understood and driven as metrics and accountability and visible throughout that practice. And certainly the PE firm on a monthly basis is asking questions on how we're progressing relative to that investment thesis. So they're very focused on the right things. There's usually 3 to 5 things that are going to move the needle on making that business better. And there's usually metrics around it and a lot of accountability and visibility around it.
This might be more of an operations question, Scott, but what strategies do private equity firms deploy to continue to operate in ever-changing and often restrictive regulatory and policy environment? Do they get into situations that they then sell a company if they can't perform within those regulatory changes, et cetera?
I'm not sure I understand. Maybe repurpose the question.
I think the audience is asking in private equity firms, if you're in a particular, in dermatology or in a particular discipline, and there's a lot of changes in policy from the government or other types of regulatory policies, do private equity firms change very nimbly?
Yeah, honestly, they would be less focused on themselves and more focused on the private equity portfolio company and or healthcare practice and their ability to change nimbly to that. If they had confidence that the portfolio company and or healthcare practice could, the PE firm would look at that change as a real positive opportunity to ramp that business to another level with more runway, and probably they'd extend their hold period as a result of it because other competitors maybe not as nimble. But in most cases, the PE firm themselves wouldn't be looking in the mirror and saying, hey, can we be nimble? They'd be looking at the portfolio company and saying, can they be nimble? And if they can't be nimble, they'd be looking to exit because then it's a threat.
How do private equity firms look at IT and digital transformation as a strategic lever, given that the payback is somewhat longer on those types of investments?
Yeah, great question. I think the truth is I think they're kind of conflicted on this. It's a sexy term and it's viewed as it being digital as clearly a mechanism to improve businesses in today's world, and healthcare is no exception to that. I would say it's always on the radar, it being IT and digital. Depending upon the situation, it would be something that would be invested in early. Because again, you're doing that with an eye towards make your investment the first couple of years, start to show the results from those investments in 3 to 4 years, and then you've got something really interesting to sell in year 5. You would typically not make major IT investments or digital transformation exit investments in the middle part of the later stages of a private equity investment, just because you're not going to get the return for that. So there's an appetite for investment for sure. Smart private equity firms are looking to do that early, and then they get a return for that. The next buyer is going to look at that and say there's a foundation built in digital or there's a foundation built in IT that I can scale off of, and they're going to get a higher multiple as a result of it.
And Mary, if you have time for one more question.
Okay, are there opportunities for supply chain and operations experts in the private equity area?
Yes, a lot of them. PE firms are looking for that area of expertise on a very consistent basis. So if you've got functional expertise there, experience there, or know somebody, it's a ripe area for opportunity with private equity for sure.
Thank you, Scott, so much. We have a plethora of other questions from our audience with personal situations that are probably better answered within an email.
Okay.
So for the audience who has those types of situations where they've been asked to work within PE or work with physicians to start up a startup company, and those are the kinds of questions that we're getting. So please feel free to email me or Scott with those types of questions, and we'll try to answer them and let you know how Patina might get involved in something like that, if Patina would get involved in something like that. Obviously, Scott, your expertise is tremendous, and we're so honored to have you within our Patina leadership team. And thanks everyone for being on the line, and continue to work with us and tell us about your experience in private equity. And we'll work with you to try and place you within some of our ventures.
This has been a presentation of the Patina Nation. To watch more content like this or for more information, please visit us online at www.patinanation.com.